Well, earnings season is showing us whether economic uncertainty is having an impact on companies and consumers, but do the results reflect what the recent macro data is signaling? Let's bring in JPMorgan Asset Management Chief Global Strategist David Kelly and Bahnsen Group Chief Investment Officer David Bahnsen. David's welcome. David Bahnsen, Palantir, we're going to get the results pretty darn soon. You argue it's run too far, but does this market need names like Palantir to defy gravity if the market's going to keep going higher?
Well, the thing is that we've had precedents of both in the past. We've seen situations where the markets rotate and they don't fully drop. You just get a leadership change. I grew up at that moment in 2000 when we did not see, even as the NASDAQ fell precipitously, all markets drop. Large cap value, more Dow-like names actually did very well. There's other precedents where, yes, those leadership names kind of self-correcting and reverting to the mean in terms of valuation could bring the whole market down. So the Palantirs and NVIDIAs of the market, is the whole S&P reliant on them? I'm not sure that the jury's come back yet. I think that verdict is going to be very important.
Holding it. Okay. Well, David Kelly, moving on, do earnings, Palantir aside, Palantir included, take on a different level of importance for the markets after last week's jobs data and revisions, or no?
Yeah, I do think they're important because really, the jobs numbers, it's just one report. I think, obviously, I don't believe the BLS were manipulating the numbers in any way. They never have. But it's not that accurate, and I think it maybe overstates the weakness in the economy. If you look at light vehicle sales in July, we just got those numbers, 16.4 million units. There's nothing wrong with that. It looks like domestic airline travel is stabilizing. So what we've got here is we've got a tortoise of an economy, but it's still a relatively healthy tortoise. It's moving forward. We're going to have somewhat higher inflation. So it looks to me like the economy is doing okay. And the big thing that's really changed in the last few days is the probability of the Fed cutting in September has gone up. So it looks like we may get our interest rate cut cake and still be able to eat a fairly healthy economic backdrop.
So, David, the buying in bonds David Kelly, the buying in bonds that we have seen, does it make sense to you? What is that market signaling here?
Well, I think it means lower rates. I mean, not only have we priced in a rate cut in September, but there are now 5 rate cuts priced in between now and the end of the year, so end of next year. So it looks like, the markets are thinking, okay, the Fed's going to get down to 3% rate. If you've got a short money at 3%, then surely that long-term rate can come down a little bit. And also, we are still talking about a slow economy. We're talking about an economy, 1.5% growth. So maybe that does allow for some decline in long-term interest rates. I don't think, the economic fundamentals aren't that exciting, but it doesn't take a lot for this market to get excited.